the circulars. Further, the circulars issued by the Central Board of Direct Taxes under 194O, 194Q, and 206C 1H. I will explain the agenda for this National TDS webinar. First, I will take my session under an overview of Section 194O of the Income Tax Act 1961. Subsequently, my friend TV Sridhar ITO will present the guidelines issued by the Central Board of Direct Taxes under 194O, 194Q, and 206C 1H. I am glad that this TDS webinar is presided over by Mr. E Elango IRS, Deputy Commissioner of Income Tax. Sir will deliver the TDS non-compliance and vote of thanks. This is our agenda for this TDS webinar. Now I am going to my subject. Dear participants, today my job is to sensitize you on the section 194O of the Income Tax Act 1961. We all know that this 194O section is introduced by the Finance Act 2020. However, due to pandemic situation, the government has introduced this 194O section with effect from 1st October 2020. During my session, I will explain what is electronic commerce and who are all e-commerce operator and who are all e-commerce participant. These three terms are defined in the Act itself. So we are very clear that we have to go by the Act. The Act clearly specifies what is e-commerce and who is the e-commerce operator and who is the e-commerce participant. There is no confusion. Act clearly says what is electronic commerce. Act says electronic commerce means the supply of goods electronic commerce means the supply of goods or services or both, including digital products over digital or electronic network. Very clear. So e-commerce means there should be a supply of goods or services or both through a digital platform. Next, who is the e-commerce operator? E-commerce operator means a person who owns, operates or manages digital or electronic facility platform for electronic commerce. Very clear. E-commerce operator, either he should own a platform or he should operate a platform or he should manage a platform to facilitate in the sale of goods or services of the e-commerce participant. Famous e-commerce operator, I can tell, Amazon, Swiggy, Zomato, so many e-commerce operators are in our social media. I am only telling an example. So Amazon is an e-commerce operator. Flipkart is an e-commerce operator. Here we have to concentrate. The e-commerce operator, either you should own the platform, or you should manage the platform, or he should operate the platform to facilitate the sale of goods by the e-commerce participant, or service provided by the e-commerce participant. Now we are very clear who is the e-commerce operator. Next, who is the e-commerce participant? Here, e-commerce participant means a person. I want to highlight resident. E-commerce participant means a person resident in India selling goods or providing services or both, including digital products through digital or electronic facility or platform for electronic commerce. So overall, the e-commerce participant, he should be an Indian resident. He should be an Indian resident. He should use the platform of the e-commerce operator to sell his goods or to provide his services. Okay, e-commerce participant should be an Indian resident who is selling goods or providing services or both, including digital products through digital or electronic facility provided by the e-commerce operator. This is a comprehensive scene, dear participants. This is a comprehensive screen. 1 second, I will show the entire screen. This is the comprehensive scene. You please carefully watch this screen. Here, I want to insist, what is the nature of payment? The nature of payment is, it should be from the e-commerce operator to a e-commerce participant. Please listen. The nature of payment is, must be the payment made or payable by the e-commerce operator to the e-commerce participant. Here, who is the director? This is the comprehensive screen. I will explain in detail in the next slide. Here, I want to convey who is the director and who is the deductee, what is the threshold limit and rate of deduction of tax and time of deduction of tax. First, here, who is the director? E-commerce operator is the director. And who is the deductee? The e-commerce participant is the deductee. Next, nature of payment. What is the nature of payment? Payment made by the e-commerce operator or payment made by the purchaser to the e-commerce participant. You please listen carefully here. The intricacy involved here is, the nature of payment may be or shall be by the e-commerce operator to the e-commerce participant or from the purchaser to the e-commerce participant directly. The threshold limit involved here is, if the e-commerce participant is an individual or HUF, the threshold limit is 5 lakh. During the financial year, if the receipts of the e-commerce participant is 5 lakh or less, there is no necessity to deduct tax by the e-commerce operator. This condition is only prescribed wherein the e-commerce participant should be a individual or HUF. Here, rate of deduction of tax is 1% on the gross sales or services or both. So very clear, 1% on the gross sales. Next, what is the time of deduction of tax? Here, Act says at the time of credit. What is the meaning of at the time of credit? Whenever the e-commerce operator receives money from the purchaser, he will credit the amount in his book account on such e-commerce participant. Next time limit prescribed here is at the time of payment, when the e-commerce operator paying the amount to the e-commerce participant, whichever is earlier. So time of deduction is very clear. At the time of credit or at the time of payment, whichever is earlier, the tax has to be withheld. The tax has to be deducted by the e-commerce operator on the amount directly payable by the purchaser to the e-commerce participant. So in the earlier screen, I have told it is a gross sale. Also, whatever the payments paid by the purchaser directly to the e-commerce participant, the e-commerce operator is expected to withhold tax on those payments. 194O section consists 5 subsections. The third subsection says 194O3. 194O3 says if a transaction in respect of which tax has been deducted by the e-commerce operator under the subsection 1 or which is not liable to deduction under subsection 2 shall not be liable tax deduction at source under any other provision of the Act. You please listen carefully. If one transaction, suppose the e-commerce operator deducts tax under 194O for its payment to the e-commerce participant, in this transaction, no other provision will come into picture. Likewise, I have already told subsection 2 says if the recipient is individual or HUF and the amount receivable during the financial year is less than 5 lakh, there is no question of deduction of tax by the e-commerce operator. For those transactions, no other TDS provision will apply. So 194O3 is very clear. If the e-commerce participant, if the e-commerce operator deducts tax, or if the individual is exempted for deduction of tax under 194O2, then no other TDS provision will come into picture. 194O3 shall not apply to any amount or aggregate of amounts received or receivable by an e-commerce operator for hosting advertisements or providing any other services which are not in connection with the sale or services referred to subsection 1. The 194O3 is having one proviso. This proviso says that this 194O3 exemption shall not apply. This 194O3 shall not apply to any amount or aggregate of amounts received or receivable by an e-commerce operator for hosting advertisements or providing any other services which are not in connection with the sale or services referred to subsection 1 of section 194O. 194O4 says that if any difficulty arises in giving effect to the provisions of this section, the board means CBDT, may, with the approval of the central government, issue guidelines for the purpose of removing the difficulty. 194O5 says if any guidelines is issued, those guidelines issued by the board shall be laid before each house of the parliament and shall be binding on the income tax authorities and also on the e-commerce operator. Now I am coming to case study 1. Please carefully see the screen. Now the first case study is during the FY 22-23, an e-commerce operator sold goods of rupees 50 lakh for an e-commerce participant. The e-commerce operator paid an amount of rupees 40 lakh to the e-commerce participant after excluding GST of rupees 5 lakh and his commission of rupees 5 lakh. Here the situation is very clear. The total sales made by the e-commerce operator is 50 lakh. Out of 50 lakh, the 5 lakh relating to GST and 5 lakh relating to his commission. Here, the e-commerce operator has to deduct tax on 50 lakh. Next case study. During the FY 22-23, an e-commerce operator sold goods of rupees 4.5 lakh for an e-commerce participant who is an individual. Further, the e-commerce participant has furnished his PAN to the e-commerce operator. Then, in the given situation, the said the e-commerce operator shall not deduct tax under section 194O since the gross amount of sales is less than the prescribed threshold limit, that is rupees 5 lakh. Further, the e-commerce participant has furnished his PAN to the e-commerce operator. It's very clear. So if the individual or HUF is concerned, if such individuals are e-commerce participant, then if such e-commerce participant receives only less than 5 lakh in a financial year, on those situations, the e-commerce operator need not deduct tax under 194O. Thank you, dear participants. Now we can go to the circulars issued by the board. The Central Board of Direct Taxes issued 3 circulars with relate to 194O and 206E1H and 194Q. Let me explain first. I already explained what is 194O. Let me explain further the other provision also. We all know that 194O got introduced with effect from 1st October 2020. Here, what is the situation? The e-commerce operator shall deduct at the rate of 1% on the gross sales made on behalf of the resident e-commerce participant on certain conditions. Now, we will come to 206E1H. These both sections have got introduced with effect from 1st October 2020. This 206E1H tells if any resident seller is selling goods, then such resident seller shall collect tax at the rate of 0.1% from the purchaser if the aggregate sale value exceeds 50 lakh on certain conditions. 194Q got introduced with effect from 1st July 2021. It is a reverse section. 206E1H and 194Q are parallel. 194Q says that if any resident purchaser, if suppose purchases some goods, if it exceeds 50 lakhs, then such purchaser should deduct tax at the rate of 0.1%. Next, 206E1F. This got introduced with effect from 1st June 2016. Here, 206E1F says that if any motor vehicle seller sells a motor vehicle of the consideration more than 10 lakh, in that scenario, such seller should collect tax at the 1% on the sale consideration. This is what 206E1F is telling. Next, 206E1A. This section got introduced with effect from 8th September 2003. This section says, suppose if any buyer purchases any goods from a seller, and also if the buyer furnishes a declaration before the seller stating that certain goods are going to be consumed and not for trading, then the seller shall not collect tax under section 206C1. Here, very simple. See, 206C1 tells whoever selling a specified goods like scrap or alcoholic liquor or timbu leaves, those sellers have to collect tax at the specified rates. Here, 206C1A says that if any buyer furnishes a declaration before such seller that these goods are going to be consumed for his own purpose and not for trading, then the seller shall not collect tax under section 206C1. CBDT issued 3 circulars. First circular during September 2020, second circular during June 21, and the third circular is during November 2021. Now I invite my friend TV Sridhar to explain the circulars issued dated 29 September 2020 and 30th June 2021. Welcome, Mr. Sridhar, sir.
Good afternoon to all the participants. I feel it a privilege to amidst you to speak a few words about the circulars being issued with regard to 194 and other 2 sections. As we are aware, whenever new sections have been introduced by the Act or Finance Act, subsequently, to clear the ambiguities, to clear the doubts, Central Board of Direct Taxes used to issue circulars, and it will be of illustrative nature. Here, after the introduction of 194 also, the CBDT has issued circular number 17 of 2020 dated 29/9/2020, which is very important circular. Section 194O and Section 206C1H shall not be applicable. They are explaining about the exception categories. What are the exception categories? Transactions in securities and commodities which are traded through recognized stock exchanges or cleared and settled by the recognized clearing corporation, including recognized stock exchanges or recognized clearing corporation located in International Financial Service Center. So they are exempted. This section will not be applicable to them. Similarly, transactions in electricity, renewable energy certificates, and energy saving certificates traded through power exchanges, which are registered in accordance with regulation number 21 of CERC, will also be exempted from this purview of this section. Point number 2. For this electronic, for between the e-commerce operator and e-commerce participant, there will be a payment gateway. So now they are dealing about that. What this circular says, the payment gateway provider, the payment gateway will not be required to deduct tax under section 194O of the Act on a transaction which is happening on digital if the tax has been deducted by the e-commerce operator under section 194 of the Act on the same transaction. That means they are avoiding that double taxation. So they link that once the e-commerce operator deducts the under section 194O, the payment gateway will need not do anything. But For proper implementation, such a payment gateway may take an undertaking from such e-commerce operators. So they have to, what they say, they have to ensure that this e-commerce operator is deducting under section 194 for the digital transaction. Point number 3. In the years succeeding to the first year, they are dealing about the insurance product. So normally insurance, first year we may use the digital platform to select a particular insurance company. But in the subsequent years, we will directly remit the amount to the insurance company. Then this platform we need not use at all. So they are dealing such a subject in this para number 3. Point number 3. In the years succeeding to the first year, if the insurance agent or insurance aggregator has no participation in transactions between insurance company and the buyer of the insurance policy, he would not be liable to deduct tax under section 194O of the Act for those succeeding years. That means first year only this 194O will come, subsequently it will not come if this condition is satisfied. However, the insurance company shall be required to deduct tax on commission payment, if any, made to the insurance agent or insurance aggregator for those succeeding years under the relevant, which are all normally is happening only. So that they are, once again, they are reiterating that. So for insurance aggregator, for those succeeding years under the relevant provision of the Act. Next, number 4, calculation of threshold limit for section 194O, 206C, 1H, because both the sections were introduced with effect from 1st October 2020. The financial year 2020-21, so the amount involved, amount paid to the e-commerce participant by the e-commerce operator in respect of section 194O and the amount sold by the seller between the period 1st April 2020 to 30/9/2020 must be taken into account to find the threshold limit of 5 lakhs. See here what they say, already for individual they set a threshold limit of 5 lakhs subject to the condition that they give their PAN or Aadhaar number. That's right. To the e-commerce that participant. Okay. Here what they say, even though the section is from effective from 1st October 2020, for calculation purpose, they say you should take it from 1st April. Since it is introduced mid financial year 2020-21, what they say clearly here, you will have to take into account the period from 1st April 2020 to 30/9/2020 for calculation purpose of threshold limit. Similarly for that 50 lakh also, and accordingly taxes have to be deducted from 1st October 2020. This as my friend Sh Rajaraman told, section 194Q and section 206C 1H are identical. When in one side it is TCS, other side it is TDS. So whenever TDS 206C 1H and tax this TDS 194Q. Point number 5. Applicability to sale of motor vehicles. Here there is 2 categories. Manufacturer to dealer or dealer to dealer. It's a wholesale. Then 206C 1H would be applicable and not 206C 1F. What is 206 1F? We are going to see again now in the coming lines. So again repeat, manufacturer to dealer or dealer to dealer 206C 1H would be applicable and not 206C 1F. Now B, dealer to consumer. Now third category, because first manufacturer to dealer, dealer to dealer. Third category is dealer to the end user, consumer. Here, if the motor vehicle value is 10 lakh or below, then 206C 1H will be applicable. They are telling very clearly. All these circulars can be straight away downloaded from Google. Only you have to tap that CBDT circular number only, readily available in the Google platform. Second category is, if the motor vehicle value is more than rupees 10 lakhs, then 206C 1S will be applicable. This we will have to keep in mind. Next item 6, adjustment for sales return, discount or indirect taxes. Because these are all things normally will happen in the common the trade business. No? So they are giving very clear directions or clear guidelines. What they say? Board says, no adjustment on account of sales return or discount or indirect taxes, including GST, is required to be made for collection under section 206C 1H. That means once you did it, that is final. You need not go back. Even after it sales return or discount, whatever it may be, you don't bother. So it says you need not go again. No adjustment or account of sales return discount is need to be made for collection under section 206C 1H. Point number 7. Fuel supplied to non-resident airlines. The TDS provision 206C 1H shall not apply on the sale consideration received for fuel supplied to a non-resident airline at airports of India. Because when the flight comes from other countries, naturally the fuel will be, they need fuel, and our Indian country airports will be giving such supply. For that they are telling this 206C shall not apply. Now we are going to discuss about another important circular, circular number 13 of 2021, dated 36/2021. This is also very, very important circular. In fact, you can take it as a guideline also. About 194Q, what they say, because there is a lot of use and cries and doubts cleared, everything the people started. So the board has given a very clear-cut directions in the circular, in which they start like this. Section 194Q, actually I am dealing only the crux of the circular, because circular will be a big one and we are dealing only the important section, or what they are going to tell we are now dealing. Section 194Q shall not be applicable. Number 1, transactions, similar there we see in 194 also, no, same thing. Transactions in securities and commodities which are traded through recognized stock exchanges or cleared and settled by the recognized clearing corporation, including recognized stock exchanges or recognized clearing corporation located in International Financial Service Center. Same thing we saw in 194, the same thing only 194Q also. Transactions in electricity, renewable energy certificates and energy saving certificates traded through power exchanges registered in accordance with regulation 21 of CERC. So these two will not come under the purview of 194Q, or rather 194Q will not be applicable for this transaction. Number 2, calculation of threshold limit for section 194Q. See, because this section 194Q also was introduced mid financial year 1/7/2021. So they say how you have to calculate. Same way, what we see there, here also we are seeing in the financial year 21-22, for example, the amount involved, amount of purchase from the resident seller from 1/4/2021 to 36/2021 must be taken into account to find out the threshold limit of 50 lakhs. Because the 194 for 194Q, mainly two conditions. Number one is threshold limit is 50 lakhs. Other condition is previous year they must have had minimum 10 crores on above turnover. That is the two conditions. Here what they say, for that calculation the threshold purpose, even though the section starts operative from 1st July 2021, for calculation purpose, they say you take the amount involved from 1/4/2021 to 30/6/2021 into account for calculating the threshold limit of 50 lakhs. Point number 2. Adjustment of GST purchase returns. Here slight difference you will see from 194 and 194Q. Here, if the component of GST is separately indicated in the invoice, tax shall be deducted under section 194Q without including GST. However, if the payment made in advance, the tax would be deducted on the whole amount, as it is not possible to identify that payment with GST component of the amount to be invoiced in future. Against the purchase return, the money is refunded by the seller. Then this tax deducted may be adjusted against the next purchase against the same seller. No adjustment is required if the purchase return is replaced by the goods by the seller. Actually, for purchase, they are giving slight adjustment only. Again, the purchase return, the money refunded by the seller, then this tax deducted may be adjusted against the next purchase, provided the same seller. Another point number 3 is a question like question and answer mode actually. Whether non-resident can be a buyer under section 194Q? No. Non-resident is not applicable for this 194. Number 4. Whether seller purchase income is exempt. In the case of purchase, if seller income is exempt under section 10 or under any other act passed by the parliament, for example, RBI Act, ADB Act, etc., the section 194Q shall not apply. Similarly, in the case of sales, if purchaser income is exempt, then section 206(1)(h) shall not apply. The above exemptions are not applicable if only part of the income of the seller purchaser is exempt. Point number 5. Whether tax is to be deducted under section 194Q by a buyer for an advance payment towards purchase. Answer is yes. The circular says yes, you will have to do it. Point number 6. Whether tax is deducted under section 194Q by a buyer in the year of incorporation. No, because the condition is previous year that 10 crore mark is there, turnover. So they say no. If it is for say first year of incorporation, no, 194Q will not apply. Point number 7. Whether tax is to be deducted under section 194Q by a buyer if the turnover is less than 10 crore. No. Answer is no. Tax has to be calculated only if the buyer's total turnover exceeds rupees 10 crore during the financial year immediately preceding the financial year in which the purchases of goods is taking place or is carried out. Point number 8. Cross application of section 194O, 206C1H, 194Q. Very important lines. If tax has been deducted by the e-commerce operator under section 194O, then that transaction shall not be subjected to tax under section 194Q. Supposing the e-commerce operator deducts under section 194O the transaction, then 194Q will not applicable at all. Categorically, they say in this line only. Similarly, 206C1H provides exemption from TCS if the buyer has deducted tax under section 194Q. Because if already it is happening, no, then 206C1H will not come at all if 194 happens. And this exemption would also cover a situation where instead of the buyer, the e-commerce operator has deducted section 194, deducted tax under section 194O on that transaction of sale of goods by seller to buyer through e-commerce operator. That means when the 3 section comes, if the operator, e-commerce operator deducts tax under section 194O, then the 206, 194, nothing will come. Only 194O will remain. Point number 8. Cross application of section 194O, 206C, 1H, 194Q. If a transaction is both within the purview of section 194O and 194Q, then tax is required to be deducted under section 194O only. They are telling very clearly, categorically. Supposing a situation arises where for a particular transaction, both 194Q is available, 194O is available, then the overriding section will be 194O. 194Q will not be applicable. Point next. If a transaction is both within the purview of section 194O and 206C, 1H, here also the tax is required to be deducted under section 194O only. Primary responsibility is on the e-commerce operator, and the responsibility cannot be condoned if the seller has collected tax under section 206C, 1H for the reason that that rate under section 194 is higher than the 206C, 1H. That means the responsibility is thrust on the e-commerce operator to go for 194O only, and another these two sections will come back. So only there the 194O will emerge. Next point. If a transaction is both within the purview of section 194Q and 206C, 1H, then 194Q prevails over. So whenever 194Q and 206C, 1H comes, then 194Q only prevails. However, if for any reason tax has been collected by the seller, then such a transaction would not be subjected to tax deduction under 194Q for the reason that the rate are same in section 194Q and 206C, 1H. I already told you, both are identical only. The 206C, 1H and 194 are similar, 0.1% only. So that only they are telling that for any reason tax has been collected by the seller, then such a transaction would not be subjected to tax under section 194 again. Thank you very much. I once again thank my colleague Rajaraman for giving me this opportunity, and I also thank all the participants for patiently hearing my presentation. Thank you very much. My Rajaraman sir will take over.
Thank you, Sridhar sir. Now we are going to concentrate on the circular issued on 25th November 2021. Here, the very vital point. In the circular, it says that about the e-auction services. If the following conditions are satisfied, like A to F, then there is no question of deduction of tax under 194O. Very simple. Yeah. If the e-auction service provider shall facilitate its client only in respect of price discovery, then on those situations, 194O will not be applicable. Second condition, the price discovered by the e-auction service provider is not the final one. It is up to the discretion of the client to accept the price or to negotiate with the counterparty. In the situation also, 194O will not come into picture. Next condition is the facilitation provided by the e-auction service provider is just a starting point in discovering the price. Again and again, this circular says that if the role of the e-commerce operator in facilitating the e-auction is only for price discovery, then those e-commerce operators do not require to deduct tax under 194O. The next condition is the e-auction service provider is not responsible for anything apart from the price discovery. Next, the e-auction service provider do not have any role of transaction between its client and the counterparty. The last one is the client shall deduct tax on the payment made to e-auction service provider under the relevant provisions of the Act other than Section 194O. The situation is very clear. If any e-auction service provider is facilitating its client only to discover the price, then there is no question of deduction of tax under 194O by such e-auction service provider. Already it has been told the adjustment of various state levies and taxes other than GST. It is like in section given under circular number 13 of 2021 shall apply here also. Next one is applicability of section 194Q, wherein exemption is provided under section 206C 1A. I have already told 206C 1A tells if any buyer furnishes a declaration before the seller that the purchased goods is going to be consumed, then the seller will not collect tax under section 206C1. However, on those situations, the purchaser would have got exempted from tax collection. But the Act says that 194Q shall not be applicable if 206C1H is covered. This is okay. The next condition here is, though the entity who got exemption from the counterparty from collection of tax under section 206C1, section 194Q will apply and the buyer shall be liable to deduct tax if the conditions specified therein are fulfilled. Let me explain in detail. Suppose one seller is selling goods of 1 crore. The purchaser is purchasing the goods. The purchaser furnishes a certificate to the seller stating that the 1 crore worth of goods is going to be consumed and not for trading purpose. Then naturally the seller will not collect tax under section 206C1. However, the purchaser who is purchasing 1 crore worth of goods from the seller has to deduct tax under 194Q. Next one is applicability of section 194Q 206C1H in respect of department of government not being a public sector undertaking or corporation. So suppose one person is selling a goods to a pure government department, or one person is purchasing goods from a pure government department, then both these sections 194Q and 206C1H will not be applicable. However, in respect of a public sector undertaking or corporation established under central or state act or any other such body, authority or entity shall be required to comply with the section 194Q and tax shall be deducted accordingly. Here I can say that the public sector undertaking like banks, suppose if they are purchasing goods, then they have to deduct tax under 194Q, whereas a pure government department purchases some goods, 194Q will not be applicable. Thank you, dear participants. I have been instructed by Sh E Elango sir to give the official mail ID and WhatsApp number to all the participants. And dear participants, if you have any doubt over 194O or 194Q or 206C1H, you please feel to communicate to us in the given mail ID and in the WhatsApp number, and it is our duty to reply to resolve your grievance. Thank you very much. Now I invite Sh E Elango IRS, Deputy Commissioner of Income Tax. Sir belong to 2015 batch IRS cadre, and sir is having most exposure in the department. Sir was in investigation wing, and also sir was in regional training institute, and sir has generated so many batches of inspectors in the last 2-3 years. So I invite Sh E Elango IRS, Deputy Commissioner sir, to deliver vote of thanks. Sir, Elango sir, I am inviting you.
Thanks, my colleagues, Mr. Rajaraman and Mr. Sridhar. Friends, Rajaraman has not entrusted me only with vote of thanks. He has also asked me to discuss the consequences of non-deduction or non-remittance. Actually, if you see these consequences and vote of thanks, they are not complementing each other. Actually, they are contrary to each other. Actually, probably the whatever the faith reposed on me, let me try to do some justice. Let me discuss the consequences first. 2011, there, if in case of non-compliance of TDS, will be the tax deductor will be the defaulter. That is the first charging section. Then in under section 40A IA, assessing officer may disallow the entire expenditure just because TDS is not done there. Other thing is there are two types of interest. One is interest under section 201 1A. That is again two types. One is for non-deduction. In case of non-deduction, it is 1% per month. Deducted but not remitted to the government account, it is 1.5% per month. Again, one more interest is there, that is under section 202(2), that is 1% per month if the interest is delayed. So this interest will come in picture. Then 234E, this is not just taxes deducted and remitted, the responsibility is not yet over. For the tax deductor, he has to file the quarterly TDS returns. That is called now TDS statements. That is not done. Rupees 200 per day it will be charged. That is under section 234E. Then the serious things are coming: penalty and prosecution. Penalty under section 271C for TDS, 271CA for TCS. That is 100%. 100% of TDX will be levied as penalty. The gravest thing about the TDS is prosecution. Friends, I would like to share here that we do have, not only in TDS, in the investigation wing, assessment, most of the places we do have legal issues. Wherever the legal issues are there, we have to see the success rate of the department. Success rate of the department is more than 90% in TDS. The reason being, there is evidence. Tax is deducted but not remitted. There is evidence. So it is a very, very grave offense. That is why generally in income tax, it is dealt with the civil law only. When the prosecution comes up, it becomes a criminal law. So it is about imprisonment of from 3 months to 7 years of imprisonment. You may ask whether you have detained somebody, whether anybody arrested. It has happened. Had you asked me about 25 years back, I don't think so. But if you ask me now, it is happening. These are the consequences when TDS compliance is not made. Now let me come to vote of thanks actually. I have been here throughout the sessions taken by Mr. Rajaraman and Mr. Sridhar. I think even I could not follow a few things actually. Maybe a little fast, maybe the same thing I have done in the consequences of non-compliance also. That's why Mr. Rajaraman has shared his mobile number as well as the email ID, because there is a problem with online arrangement. People, we don't know the mood of the people, whether people are listening or they have doubts, they cannot ask. All these are the problems actually. But I've been a trainer, I've been facing this actually, but the entire world changes. We also have to change. I find one very, very positive thing about this online is we could get the right faculty. Otherwise, if it is in a physical mode, it would be difficult. Now we can call anybody from US, we can call anybody from Japan, we can call anybody from Brazil, like that actually. That is the big advantage we are having online mode actually. So, like this is the inputs you have received today from horse's mouth. They are TDS officers, successful officers in TDS. That's what you have received. I am very, very happy about it. Friends, the initiative started by our Sri M. Arjun Manik, our Joint Commissioner, sir. And it has been beautifully implemented by Sri Murli Radhakrishnan, who took the lead, who took the initiative. Whenever we said, they immediately took that, sir, I could do it, and he has done it also. He is the founder of All India Chamber of the Tax Professionals, and he is also a motivational speaker. I happened to meet him. I was thoroughly impressed. He is a trainer and skill and personality development classes. He is a trainer. Sir, I take this opportunity to thank you very much for having arranged this online seminar. Then we are doing this program in the NADT regional campus of Chennai. I must thank Sri Nandakumar, our additional Director General, and the officers and staff here for having accommodated us here. Finally, if you are not there, I have about how many people? 37 plus. 37 people here are here who are e-commerce operators and e-commerce participants. Mostly you would be the tax deductors actually. In fact, honestly, I want to thank you not just because you are here. The tax deductor, if you see, we have about 55% of TDS from our total collection, which is more than advance tax. If somebody is paying advance tax, it is their own tax they are paying. But as tax deductors, what you are doing, you are deducting the tax from others, and you are remitting it to the government account. Actually, you have to be appreciated for that. You may not know one more thing, that just by deducting and remitting the tax, you are bringing more and more people into the tax net. This is more than advance tax payment. This is more than the self-assessment tax actually. So I must thank you from bottom of my heart that for having done this job and listening to this online seminar. Thank you very much.